Hello and welcome to a new mini webinar from the Michigan Restaurant and Lodging Association. My name is Justin Winslow, the president and CEO of the association. With me today is Dave DeCue, the senior manager of state and local tax with Plante Moran, the trusted firm of the MRLA, to share some interesting news, especially for you smaller independents out there that may have been erroneously paying sales tax on to-go containers that you make available for your carry-out orders or your delivery orders. After many conversations with the Michigan Department of Treasury, we have a clear ruling that this industry should not be paying sales tax for those business-to-business transaction. Here to clarify that and with some next steps of what you can do to change that fact, if that is what is happening with you and your business right now, and possibly recouping some lost revenue that you have spent erroneously. Dave, I'm going to kick it to you. You're up.
Perfect. Thank you very much, Justin. Well, what an introduction. So as Justin mentioned, I'm here to talk to you about the taxability of carryout containers. Now, I do want to say that these are general rules. So as with anything sales tax related, specific fact patterns can yield a different result, but these are the general rules here for the state. So this actually goes back to a Michigan letter ruling from 1987, which in pertinent part reads that items that become an ingredient or component part of the prepared food or beverage may be purchased tax exempt as a sale for resale. Items in this category would include all carry-out or to-go containers, paper napkins, wet naps, doggy bags, foam cups or containers, lids, straws, and etc. Now, essentially what this means is that the carry-out container becomes part of your sale to the customer, along with other enumerated items there. Now, noticeably absent from this list in the letter ruling is the mention of utensils. So restaurants are normally considered to be the user of utensils when used for seated dining. Purchases of utensils are taxable as a result. Now, specific purchases of utensils may be exempt if used for carryout. There's no guidance directly on this point from the Michigan Department of Treasury. However, I would say that the inclusion of cups, straws, and lids in the list above in the letter ruling really indicates that disposable utensils would be viewed in the same manner. It can be purchase exempt for resale as well. Now, there are some other considerations here beyond utensils. So first, what if you're in a situation where you have property that's used both for indoor dining and for carryout? One item that this would pop to mind would be for napkins. So if you use the same napkins in your restaurant to give to your customers as you would throw in a carryout bag, you have to consider dual use and whether or not both are exempt or one's taxable and one's exempt. So napkins, if used for indoor dining, as I mentioned before, when the restaurant is considered to be the user of utensils, the restaurant would also be considered to be the user of napkins. If purchased for indoor dining, the napkin would be taxable. However, if you're purchasing napkins for carryout, then the napkin would be exempt under the letter ruling above. Now, this isn't a big deal if you're using two different types of napkins because you can easily determine what's purchased for in-restaurant use and what's purchased for carryout. However, if you have the same napkins on the table as you do in a carryout bag, you have to go through some administrative work to determine what's actually being purchased for carryout. The risk of claiming an exemption on products that are used in the restaurant, in the case of napkins here, would be that you would become liable for use tax if they were purchased exempt from tax. So you'd have to self-remit the 6% tax, or self-assess and remit the 6% tax back to the state of Michigan. Now, you can also run afoul of some items that are used for internal purposes. So similar to the situation in which napkins we use for both indoor dining as taxable and then exempt as carryout, what if you have employees who may take home food in a to-go container? Now, if you were selling that container to a paying customer, it would be exempt as outlined above. However, if an employee is kind of withdrawing that container from inventory, putting their food in it and taking it home, technically that'd be a taxable use. You again would be considered the user of the container as there's no taxable sale made to a customer in that situation. This is an administrative business problem you've got to address. How can you track this? Is it worth the effort to track? And what's the ability to support any claim that you make under audit if you're pulled for audit? All right, now moving on. So how do I claim an exemption? So if to this point you have been paying tax on things that you think should be exempt, you have to make a claim for exemption from your vendor. This is done by filing Michigan Form 3372, which you can see on the screen. And on the form, section 3, box 2 indicates that the items you are purchasing will be used for resale. Now, note that this can be a one-time form or can remain in place with the vendor, as indicated in section 1. So if you purchase many items from the vendor, perhaps a mix of taxable items and exempt items, you should consider using this form only on an invoice-by-invoice basis. If you don't do that, you run the risk of your vendor not charging you tax on taxable items and opening yourself up to use tax liability on those purchases. Additionally, we're in an environment with a carry-out heavy amount of business. So, if in the future, if you put a blanket certificate in place and have a different percentage of carry-out business, then you open yourself up to some exposure that you're now purchasing items in the future that are exempt for carry-out, but are really being used in restaurant. So, and the final thing to note with this form is that a separate form must be provided to each vendor. The vendor keeps this form on hand and only provides it to the state of Michigan if the vendor becomes under audit. This form becomes their justification for not charging you tax on purchases. All right. Now, what to do if you've been paying tax? So there is a refund opportunity here. So if you think you have been paying tax on exempt items, you do have the ability to request a refund directly from the state of Michigan. Michigan Form 5633, seen on screen, is used to make a refund claim for taxes previously paid on items which are eligible for a resale exemption. One form must be filed for each vendor to the state from which you are requesting a refund of tax. There are detailed instructions on the form on how to do this. As you can see on the second page, you do have to go through and list out the specific purchases on which you're claiming tax from, or claiming a refund of tax from that vendor. Now, note that the Michigan statute of limitations for making a refund claim is 4 years. So what you're looking at is getting a refund for the past 4 years worth of taxes paid on items that should have been exempt. Before filing this form, you do have to make another business decision and what's the cost benefit of making the refund claim. The information you'll be providing to the state is pretty intensive. You do have to pull each invoice to determine the amount of refund you'll be claiming related to each invoice. Now, I've included links here to the two forms that are to be used, both the exemption claim and the refund claim, and provided my direct contact information here as well. If you have any additional questions or like to discuss this further, please don't hesitate to reach out. All right, thanks everyone for your time today.
Dave, that was fantastic. This is exactly why Plante Moran is our go-to for all technical tax-related questions. Listen, if you're listening, this may not impact you directly, but it's worth a contact to your vendor specifically for these materials. We have heard enough anecdotally from our membership that they have been paying. And so this could be a big opportunity for you to save some money retroactively for some of you. And also prospectively, it's going to be a winner with more carryout than we've been accustomed to in the past. And this is a way to help shave some costs than you might be dealing with right now. And we're going to keep doing everything we can to keep all of you in business through a tough winter. Thank you for your time and have a great day.